Chapter 16, Lesson 1, we are going to prepare an income statement, and it's going to be for a merchandising business organized as a corporation. A corporation prepares an income statement and a balance sheet similar to those used by a proprietorship. A corporation also prepares a statement of stockholders' equity. Financial statements provide the primary source of information needed by owners and managers to make decisions and future activity for the business. The financial statement should provide information about the business's current financial condition and changes from the previous reported financial condition. It also reports the progress of its operation. Uses of the financial statement. Again, it is the income statement of a merchandising business has four main sections. You have the operating revenue, cost of merchandise sold, operating expenses, and your other revenue. Let's take a look at the income statement. It looks like this whole sheet here. Okay, and we'll break it down into different parts. You will get the information to fill out your income statement from your adjusted trial balance up here that we prepared last chapter. So the first section deals with our operating revenue. You can see it shaded in. We're going to include our sales and our contra sales. The second section is our cost of merchandise sold section. It includes not only the beginning and ending inventory, but all your purchases you've made and your discounts and your allowances. The third section is your operating expenses, which include all of your expenses. The fourth section is for other revenue, other than sales, the other sources of revenue that your business may have. After that, we will figure out our net income before taxes and after taxes. The revenue earned by a business from its normal business operation is called operating revenue. The amount of sales, less the sales discount and sales return and allowance, is called our net sales. So we're going to sell some merchandise. Then again, we're giving some discounts, and people may return some of that merchandise to us. The operating revenue section of the income statement for a merchandising business looks like this. The first thing is your heading. Remember, in your heading, you have your name of your business, the financial paper you're preparing, and this covers a fiscal period of 1 year, so you put for year ended December 31st. Our second is to prepare the operating revenue section. So we put the title. It is operating revenue. That is the title of the section. Then we are going to put the title of our revenue account right there. You can see it's sales. We will put the sales amount in this column. You will notice that there are 4 columns. Okay, the fourth column here represents the total of that section. And then again, we have subtotal columns that go back in columns 1, 2, and 3. And you'll get the hang of it as soon as you see where some of the numbers go. Okay, after we're done writing our revenue, we are going to do our contra accounts. Okay, and it says less, so we're going to subtract from our sales the 2 contra accounts, sales discount and sales return allowance. We will put those numbers right there in the subtotal column. We will draw a single line. Remember, anytime that somebody looks at a financial report, the single line should be referred to as summing up a total, adding, subtracting. So we are going to add those 2 numbers together, and we will come up with an amount that goes right here. Instead of creating another line, we just put it on the same line, understanding that this is a total of those 2 numbers. Then our next is our net sales. We take our total sales minus our contra sales, and we come up with the total amount of our net sales. And that is 100%. That's what we will compare everything to when we do our comparisons. The original price of all merchandise sold during a fiscal period is called the cost of merchandise sold. Cost of merchandise sold is also known as goods sold or cost of sales. The operating revenue remains after the cost of merchandise sold has been deducted is called gross profit. Okay, so we have some revenue, and then we have to take away what it cost just for that revenue. And the result is our gross profit. Gross profit is also referred to as gross profit on sales. Okay, next we're going to take a look at the cost of merchandise sold section of our income statement. You can see we've already done that part there. So next we are going to write the heading, cost of merchandise sold, what it costs for the merchandise that we are selling. The first line, we are going to fill out our merchandise inventory on January 1st, and that amount goes right there. Then we're going to list the total of our purchases. Remember, we're getting this all from our adjusted trial balance. Our purchases will go right there. Then we have our Contra Purchases. These are going to reduce our purchases because we gave a discount and there was some merchandise returned. Those numbers will go there. Draw a single line. You will add up those two numbers and that number goes right there. We'll draw a single line there. We will figure out our net purchases. So we take $254,851.26, and then it says less, so it's going to be minus that amount. And we'll come up with our net purchases. So right now we have the beginning inventory plus all the purchases we made. So then we're going to take those two numbers and add them together for our total cost of merchandise available to sales. So we have our beginning merchandise inventory plus our purchases, and this amount right here represents the total that we have for sale. Next, we're going to take a look at the merchandise inventory at the end of the fiscal period. This is basically what we have left in merchandise. Okay. Then we'll draw a single line under that. We'll take the $360,920.55 minus the $102,000 of our ending merchandise, and we'll come up with our cost of merchandise sold. $258,082.55. Then our gross profit is, here is our net sales. This was our sales. This is how much the merchandise costs for those sales. So we'll take this number minus this number, and we come up with $368,699.44 for our gross profit. And again, when we figure out our percent of net sales, we would take this number here divided by that number to come up with that. Same thing with our gross profit. We take that number, divide it by that number, and we'll come up with 58.8%. So 58.8% of every dollar is your gross profit. The expenses incurred by a business in its normal operation is called operating expenses. The operating revenue remaining after the cost of merchandise sold and operating expenses have been deducted is called income from operations. And income from operations is also referred to as operating income. So we're going to take a look next at the completing the income statement. Okay, so we will write our next title, operating expenses. And then we would list all of our expenses, but not the federal income tax. So we're going to list all of our expenses, draw a single line, you'll total it up, so your total operating expenses will be totaled right there. Our next section is other revenue, and we do have other revenue from interest income, and that number goes right there. We'll draw a single line there. It says net income before federal income tax. So we will take this number plus this number to come up with our net income before federal income tax. Then it says less federal income tax expense. So we will write how much we paid in taxes. minus, and we will come up with net income after federal income tax. When this amount is after it's figured out, you will double rule across all 4 columns. And again, these numbers are found the same way. You take this number divided by your total sales and so forth down the line.